Hello everyone, welcome back to my channel The Trade Blazer. Welcome to yet another live learning session on options trading. Having said that, today it's not live though because I was not available in the first half. I could not do a live recording of the trade. Okay, so it was a very small trade though, but let me explain what are the levels and what was the what are the levels drawn for today's intraday trading. Even before that, so I have posted a question in the community saying that 9:15 candle on 4th of this month is a bullish candle or the bearish candle. So good that 63% of the people answered it right. It's a bullish candle. Let me explain the logic behind that candle over there. Not just a candle, but the location is also important for a candle to be, to decide upon whether it is bullish or bearish, right? So though it's a inverted hammer candle, we cannot call it as a shooting star, right? So based on the location that it is happening, so you can see that it is well within the yesterday's range, and then you know when it is appearing in green over here, a big candle over here, that indicates the entry of the buyers. Okay, once again you can see that it is holding its levels, but it is not a strong bullish candle as marubojo something like this, marubojo something like this, but it's a very weak, you know I would say, strength wise it is the last place for the bullish candles. Okay, which needs a further confirmation, from the next candles that is going to form, right? So next candles also you can see that it is not going below or breaking below this yesterday's low, where so there is this orders getting accumulated, long side orders getting accumulated. You can see only the wicks here, and the second candle is not going below this, breaking below this, and the third candle is a green candle which gives us a confirmation for the entry. And even the fourth candle tries to break below this, equal lows over here, and then bounce back immediately, right? That gives a confirmation that to go long here, this could have been a wonderful trade over here. Okay, so that way this is a bullish candle, not a bearish candle. Okay, so the location, let's say for example if I switch to weekly time frame uh, for a while, you can see that this is the shooting star, and you can see the follow-up candle. So the shooting star or the inverted hammer which occurs at the top will indicate bearishness, and this is a bearish candle. Okay, the location for the candle is very important, because without location or the references, the candle doesn't give any meaning sometimes, right? We can't buy any every green candle, can't sell every red candle, right? So that's that. Okay, and let's say for example you can see here it is occurring almost at the resistance area. This is a shooting star which indicates bearishness, and you can see a fall from there. Okay, but whereas the 5 minutes candle, yesterday's in the last trading sessions 5 minutes candle is occurring right at the support and not willing to go below, which indicates bullishness, not the bearishness. That was the logic behind this candle psychology. Okay, having said that, let's dive into our today's session and see what was the levels, and what was the trade and all that. Okay, once again let me try to shift to the weekly time frame, and because yeah, so the week has completed and I would like to draw the levels on the weekly chart as well. You can see that once the strong candle closes, weekly candle closes below this, this confirms as a weekly, you know bearish, order block over here. Okay, that is one level, very important level on the higher time frame. And then this old low sell side liquidity lying below this low over here. Okay, and then this was the range that we can consider. And then if I switch to 15 minutes time frame, so you can see that these are some of the levels that we can observe over here. So there is a very important breaker block that I have drawn for today's intraday trading. You can see that there is a swing low here and swing high over here. First the swing high has been taken in this retracement swing, and then after that it came back and taken the low of this swing as well, which confirms a bearish breaker block, which is very powerful. And you can see that as soon as the price opens today just above the last session's closing, it travels upside, and then as soon as it taps into this breaker block, selling started from there. Let me explain the psychology behind this breaker block logic, right? You can see that there is a buying happened, there is a retracement, and then the buying continues. So during this move, the buyers who has got accumulated during this bullish move over here, there is a sudden reversal from this area, and then we can see that all of them are sitting lost towards the end of the day. And then once the price opens, little bit of a flat to gap up opening, and then the price travels towards the upside, they'll be in a cost to cost, something like that, right? From a loss, if they recovered and then came back to break even or cost to cost, what is the thinking of the buyers would be to exit the trade with break even or cost to cost, right? That is the psychology behind the logic of breaker block, okay, with which we can see that there is a sharp selling after that, okay. Coming to my trade, I was not available during this entire day over here. I came exactly after this somewhere here, after 1:30, and then by the time you can see that Bank Nifty, reach the low of this old low, and then where it might collect sell side liquidity and starts moving up from here. So based on this logic, I wanted to enter into the upside trade. You can see that Bank Nifty collects the liquidity below this old low, and then starts moving up. It makes a high here. Okay, so then what happens is this high is broken very strongly, and you can see. So till here you can see that Bank Nifty is forming lower low and lower high format, right? And then forms a high and then breaks this high as well. Okay, so this um, indicates a shift in the market structure towards the upside. In the minor market structure, I'm not talking about the major market structure, but then minor market structure, where if I explain the psychology behind the this market shift, let's say for example, all these sellers who have sold from this top are sitting with a good profit till here, and then once market makes a high over here and breaks above this high, automatically all these sellers are now sitting with a less profit. Let's say once it is back to this area where they can see a little bit of again increased profits, they would sometimes exit the trade, with which we can see a continuation in the upside, right? So that is the logic behind the mitigation block. This block is considered as a mitigation block, where they will try to mitigate the difference in their profit, right? So that's something similar to the breaker block logic. So based on which I wanted to go long somewhere here immediately once it enters into this mitigation block. What if these are the big guys, right? So who want to continue selling? Okay, so then in that case, my view would go wrong where I had to take the exit, right? So I had to accept the SL, a small SL of 15 points in this trade, and then, you know, with which I made a loss of about 2,200 for today, and then that's all for today, guys. And this is how we have to make losses. Whenever we are making losses, we need to keep the losses under control, right? And then whenever we are making profits, it should be more than the average losses that you make, right? So with which you can ultimately become a profitable trader for a period of time. Okay, so having said that, hope you have learned something from today's session as well. See you in the next live learning video in the next trading session. Thanks for watching. Bye bye.